It's about that time of day again. It is about that time of day again. Welcome back to your nightly newsletter, boys and girls. My name is Joseph James. It's Thursday evening, March 5th, 2015. In tonight's trading newsletter, crude oil collapsed right off those highs, almost exactly as we had described in last night's newsletter. Came all the way back down to the range lows. I was expecting to go a little bit lower than it did, but we'll take it. Now we expect the buyers to enter the market at these range lows, which means we need to be patient, waiting for the buyers to fail if we're going to sell this sucker again. If you're a buyer, though, we want it to go a little bit further before we start getting the really good, juicy buying opportunities on crude oil. I'll give you a big hint: volume. Volume is one of the most important clues we're going to talk about on crude oil this evening as we get ready for tomorrow's trading session. How about some gold? Now, gold is going to be really slippery ahead of tomorrow's non-farm payroll report. We're going to start off with gold here this evening and talk about that. But gold is bearish. Yeah, shocker. After selling off at the range highs again, second market last night, gold jumps up, comes all the way back down to 1,200, almost as if they were listening to our newsletter last night. So we finished selling off the highs of the range today on gold. Volume does confirm the move lower. So we will stick to selling short on gold, and we're going to hope to get another crack at jumping up and selling it back to 1,200. Look for more information on gold in just a moment. How about the Russell? Russell is finally bullish now after 2 days of profit taking. We got two swings at it to sell the highs, two easy trading opportunities to sell those highs, but the buyers, they couldn't resist. Bulls are back in charge on the Russell after 2 days of profit taking, but we can easily see consolidation ahead of a very important non-farm payrolls tomorrow. Our plan on the Russell is to buy the lows of the wedge, but we're going to look for the bears to try and sell it before we get our best buying opportunities. And you know our target is right back to those highs from Monday evening. Guys, as you can see, we have a jam-packed, exciting newsletter for you this evening. Before we begin, though, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. Head over to sidewaysmarkets.com. Make sure you're watching this video on our trading blog. If you're watching it on our YouTube page right now, there'll be a link right below the video that will take you right to this page. There are 3 reasons why you should watch this video on our trading blog. The first reason is you can download all the charts I'm going to be using tonight in my video. You can download all of them by following that link right below the video here on the blog. Second thing, I would love to invite you as a guest to come out and join us in our live trade room. If you're not a member of School of Trade, you're curious about how do we use this newsletter to make a profit? How does it feel to be in our live trade room? What does it mean to be a member here at School of Trade? I got a great free pass for you. Register for your free pass to attend our trade room, upper left-hand corner. And of course, last but not least, the third thing here, I want to send you an email every evening when my nightly newsletter is ready for you to watch. All I need is your name and your email address. Register for our nightly newsletter mailing list, and I'll shoot you an email every evening right about 8 p.m. Eastern Time when the newsletter is published. That way, you never have to worry about missing another report ever again. So guys, download the charts, grab your free pass, and register for the newsletter mailing list. Just be aware, if you register for the mailing list or if you grab your free pass, I'm going to send you a verification email to make sure that I got the right email address and, of course, to ask for approval to keep sending you emails in the future. So make sure you check your inbox, make sure you check your junk mail, spam mail, whatever mailbox you got, and make sure you get that verification email. That way we can commence sending you this newsletter every evening. All right, guys, I hope you stretched for this one. We've got non-farm payroll Friday right around the corner. Let me start out by saying here right now that my job this evening is incredibly challenging because all bets are off tomorrow as of 8:30 a.m. Eastern Time, okay? Unless you've been living under a rock, well, I shouldn't say that. If you're brand new to this, be aware the first Friday of every month, unless the first day of the month is a Friday, is non-farm payroll Friday. This is the biggest news report we get. It's bigger than FOMC. It's bigger than any other news report. And it's really one of the only reports that have long-lasting impacts on the market. What you need to be aware of for non-farm payrolls is that the 16 to 18 hours ahead of non-farms, all the big traders have to get out of the market. Why do you think they do that? Because tomorrow, if they get stuck in a position and they're on the wrong side of non-farm payrolls, they're not going to be able to get out without getting slaughtered. Remember, it's easy for us little guys with our 5, 10, 15, even 50 contracts in the market. It's easy for us to get out of our positions. But if you're a Goldman Sachs and you've got thousands of positions in various markets, you've got to be really careful because the volume dries up, the volatility gets extreme, and if you're trading at that level, you must be careful tomorrow morning at 8:30. So most asset managers are stepping aside here this afternoon, this evening, and they're waiting for non-farm payrolls to be released tomorrow before they place their bets. Now, here's a very big concern. After the news comes out tomorrow, you're going to see crazy volatility. Typically speaking, it gets very, very volatile. So be careful tomorrow, 8:30 to 9 o'clock. Okay, you're going to see it's going to be very volatile. Sometimes, every once in a while, we don't get much volatility off it. That only usually occurs when the news report comes out and we've been expecting that result for 2 weeks, right? There has been some analyst estimates that are put out about a week and a half early. And so if we get exactly what the analyst estimates were calling for tomorrow morning, market will tend to sit sideways here, but that shouldn't last very long. We'll find a direction afterwards. What you need to be aware of is that what I'm going to do tonight is make sure that we have all of the levels above and below so we can use them for whatever happens tomorrow. I'm going to do my very best to anticipate what's likely to happen tomorrow, but you need to be aware. It's a complete jump ball tomorrow morning after non-farm payrolls come out. Okay, so I have a challenging job because tomorrow we know there's going to be a market-moving event at 8:30. So important that big money traders are stepping aside to let this thing go. In fact, the best day to trade non-farm payrolls is next Monday. That way the analysts have a chance to look through everything and they come back on Monday. They got the reports on the desks of the traders that they work with and the traders execute the plan on Monday. We call it Reaction Monday. Okay? So a lot of traders tomorrow will be sitting on hands, grabbing a round of golf, doing something different than trading. We will be trading in our trade room tomorrow morning. We don't back away from non-farm payrolls. But just so you know, don't be a hero tomorrow. Don't be a hero. And my job tonight is to make sure we're prepared. We're prepared for this no matter what direction this thing goes. All right? So I got a lot to talk about here tonight. Let's start out with gold. Gold is bearish after selling off the range highs today. I mean, how much easier was that today on gold, right? I mean, you got 1, you got 2. I mean, the thing literally up and down, up and down. I mean, all you had to do was just follow exactly what I said last night on the newsletter. And here we are sitting here at 1200. Guys, this should be no surprise that we're sitting at 1200 ahead of tomorrow's 8:30 non-farm payrolls, right? We said it on Tuesday this week. So there's no surprise at all what's going on. Most important thing right now, like I keep telling you guys, is we got to get away from this 1200. So you'll notice a little bit of a megaphone here. That tells me to expect some definite volatility. And big clue here is the volume. The volume at the bottom confirms higher volume, lower prices. It definitely confirms the bears are still here. So let's play that game. What if price goes higher? What if price goes lower? What if price goes sideways? If price goes higher, you know what I'm going to say. I'm going to be selling these areas overhead using that 1200 as my target for tomorrow. What if price goes sideways? If price goes sideways, you've got a really difficult job to measure out the highs and the lows and just scalp this sucker, buying the lows, selling the highs, buying the lows, selling the highs. And can you guess what your target's going to be? Yeah, 1200 if it goes sideways. If we go lower, this is where it gets a little bit challenging because again, without knowing the future too much right now, we know that we're probably going to get a relatively good number tomorrow, right? That's what the ADP employment report said on Wednesday morning. Wasn't stellar like we saw 1 month ago, but we know we're probably going to get a decent number tomorrow morning. It may catch us off guard, but it usually doesn't. So we're likely to see this price head lower, possibly all the way down to that measured move target. Now, this is where things get a little bit hairy. I have a very hard time telling you if we rocket lower here to be a seller. It's very difficult because you know who is staring us right in the face, right? I see you, 1200. So here's what I'm going to do. I'm going to be watching as price goes lower. I will gladly sell short down to this measured move target. But be careful, because remember, tomorrow what may happen is we may just rifle down to it. That's if we just rocket down to that measured move target at 85.8, it's probably going to be a bear trap. So look for those sellers to try above 85.8, and if they fail, you know where it's going. It's going back to 1200 again. All right? I'm telling you right now, I wouldn't be surprised one bit if we rocket down and then right back up to 1200, or the exact opposite, right? Jump up and then whoops-a-daisy, all the way back we go. Again, very difficult for me to predict what's going to happen tomorrow. All I know right now is that 1200 is the target. Volume confirms the sellers were in charge today, so stay to the sell side as we go higher, and be careful as we go lower. Again, if it just kind of meanders down here, you're fine. But if it just, boom, right? If it just takes off at the news, you know that's a knee-jerk reaction. It's most likely going to stall out and be a bear trap and come right back to 1200. Again, come on and see me tomorrow if you want more information on that. Again, it's all going to depend on what we see at 8:30 a.m. tomorrow morning. Looking further here now at our price action chart. Look at these trading ranges. Again, gave you guys some easy sells here today off those highs. I mean, I don't want to say it was easy, but it definitely wasn't difficult because we know who's in charge. The bears are in control. They're suffering from strong dollar syndrome. There's nothing else that we have to worry about. Only thing we need to be concerned with is get the heck away from 1200, right? That's the only thing we really have to worry about right now. So again, what if price goes higher? What if price goes lower? If price goes higher, you get the top of this long-term bear channel. We'll sell it back down. If price goes sideways here, measure out the highs, measure out the lows, sell the highs, buy the lows, sell the highs, buy the lows. Err on the side of selling the highs. If you're trading my account, I wouldn't even be buying tomorrow. So basically, we're looking for that sideways range around that 1200, buy low, sell high, buy low, sell high, use that 1200 as your target. And again, if price goes lower, I would expect this to make a measured move lower, right? So 1, maybe 2, but then again, be aware, it's probably going to end up back to that 1200. The worst thing for sellers if we go lower is if we just rocket down. If we just rocket down, you're going to see a bunch of profit taking here, bargain hunters, and it will come in. So if you don't get the move lower, be very, very careful selling down here because you know there are likely to be some bargain hunters buying those lows. There's likely to be some short covering rally that happens back to 1200. All right, guys, be aware of that 1200 here for gold. Let's keep moving. Now that we got the yellow metal under control, how about that Russell, boy? Now again, we gave you guys we had a couple shots at selling these highs on the Russell, right? We had a couple shots here. We had 2 shots today. If you remember the levels I gave you last night in the newsletter, go back and watch last night's newsletter and you'll see what I'm saying. We literally got 2 shots today, but they couldn't get anything done, right? Higher lows, and that of course leads me now to call this a bullish market. Remember, I'm perfectly fine being a bear after a correction like this. But if they hold and we can't make lower lows, now that tells me, no. We are not on the bearish side anymore. We are definitely a bunch of bulls here now. So we're bullish after 2 days of profit taking. We kind of assumed that was going to be the case. We just didn't know how many days of profit taking there was going to be. We know that tomorrow's non-farm payrolls, though, are definitely again, if you're managing other people's money right now, this, of course, being the Russell, this is a small cap index. there's no way that you're holding big positions into the news tomorrow. So that's why you're getting this wedge, this consolidation here. Okay, so our plan right now is to stay to the buy side. We got volume down at the bottom. There's a big clue here. Mark up the highs here. Mark up the volume. You can see we clearly confirm the buyers are here. The buyers are definitely in charge. What is very interesting, though, is that you see this high with a volume spike. What is that? That's the mass exodus, right? That's the exit from the market. That is, get me out of this market flat at the close. So again, I don't have to worry tomorrow when non-farm payrolls come out. Okay, so our plan is going to be stick to the buy side. I would expect to see some bear traps down here. I would expect to see some bear traps as we try to go lower. You know, there's going to be some sellers that are some late adopters here. So we'll definitely look to be a buyer here right now. But just be careful, though. Don't buy those highs. Wait to buy in a pullback. If we happen to jump up, just be aware there is a measured move target here. So be aware that will be a little trappy up there for the buyers. So we'll want to see it go through it, then pull back and buy for round number 2 tomorrow. Whatever you do, though, just don't buy the highs. Never buy the highs, right? Buy on a pullback. Wait for it to make new highs. That proves to you the buyers are there, and then buy it on the pullback. So if we go lower, I'm buying the support. If we go sideways, I'm buying the low of this range. If we jump up, I am not buying that resistance high. I will wait for it to break, pull back, and then buy the pullback after the break up. All right, guys, if we get a nice run out of this tomorrow, it's almost a guarantee we go back to where we came from earlier this week. Okay, it's going to take a really big push. You can see that's quite a bit of a move in just one day. So we'll definitely be looking at target, possibly getting all the way back up to those highs again by early next week. Okay, once again, can't do much more than that. I'm prepared for all directions right now on the Russell, and we'll be waiting patiently to see how this non-farm pay report comes out tomorrow. Here's another look at that chart. This is a price action chart. You can see it looks very different, but it gives us ultimately the same information. Russell price action is bullish, but we're trading inside of a wedge. Now, this wedge gives me a very big clue. I see an undershoot of the channel highs. Remember, guys, if these bulls were really as strong as we think they are, they would have had no problem getting right to those highs. They would have taken their profit. Sellers would have come in. We'd rotate back and forth here, right? So this undershoot right now is a big red flag. We can easily justify why it's happening right now. But again, think about it this way. Why didn't those buyers just keep on buying? Right? Very good question. That means there's a little bit of weakness to the upside. I'm definitely not going to call it bearish because of that. But now we know that there's going to likely be a larger correction, right? It's going to be a larger correction. So here's what's likely to happen. We're likely with this undershoot to see the price overcorrect. And because we're getting lower highs here, you're going to have some folks that most likely see this as a sell. Do not sell this area down here, guys, at 27.3 and 25.6. This is a bear trap among all bear traps right there. I'll tell you, that's a bear trap to write home to mom about right there. So we're looking for, as the price goes lower, if I had to guess right now, I would say right in this area right here, that's where you want to be looking for that turn as we go lower, right? The lack of buy pressure at the high is going to give them a little bit more wiggle room to get down here. Boy, if you see a nice one tick little token print there, whoop, right? Again, look for the bears to try and sell and fail, and when they do fail, we'll be right there to be a buyer. Now, if we do go even lower, I have a very hard time being a buyer if we go and stay below this 25.6. Okay, the undershoot here at these highs, it tells me to expect an overcorrection, but it tells me a very specific amount of an overcorrection. So I know to look for a buy and a bear trap around 25.6. I know if we get below 25.6 though, I got to look for more clues. I can't give you too much right now because I just don't know enough about what the volatility, what the personality will look like tomorrow after that non-farm pay report comes out. All right, so our plan is to wait for the bears to try and sell and fail, we'll take it up. If it goes higher, we're buying pullbacks up to that target, up to that target. But again, I would imagine, though, we're going to get that overcorrect before we go any higher. And then again, look for more clues if we get below that 25.6. Sound like a plan? Again, be ready for tomorrow and be on your toes. That Russell's going to be a little perky. It usually is, right? Non-farm payrolls, usually a pretty big deal for us here on the first Friday of the month. How about that crude? How about that crude? They were calling me cuckoo last night on YouTube. They were calling me crazy last night on Stock Twits. You think we're going to sell off the what? You got me. I had no idea what I was talking about. I had no idea what I was talking about last night. Okay, so crude oil collapses off the highs today. I know. We said it last night. All the way back down to those range lows. I'll tell you, I was a little rooting for the 50 today. I was definitely rooting for the 50 today. I wanted to see 50. We got to 51, and we stalled out a couple times. It looks like 51 is the new normal here, at least for the next 12 to 18 hours here. So here's the scenario. Now we're all the way back down to that channel low. Okay, this channel low, you're going to have some bargain hunters here. You're going to have some buyers entering this market. So we expect to see some buyers. If it goes lower, we get a measured move target here at 50.43. If it goes lower without going higher, it's going to see buyers there too. So just be aware, there's going to be a lot of buyers coming in here as we go lower here overnight. The best bet right now is if we get the buyers to enter right now. If we can get them to go take this thing higher right now we can get up off these lows and we can sell it right back down. Be careful though, because right now, if we get a bullish non-farm payroll report, we get a strong non-farm tomorrow morning, I could easily see these buyers rationalizing a buy out of this. So here's the best way to get short. It's the same thing we did last night. When you're in a bullish environment and you want to sell, the best way to do it is to wait for the buyers to try and fail. So just like we talked about last night, they go up, they try and they fail, right? That was the sell. It happened right there just before 8 a.m. This morning. Now, same thing. As we go up, wait for the buyers to try and fail, and that's going to be your option, right? To be a seller. Could you be a short-term buyer right now? Absolutely, you could be a short-term buyer right now. I would be a little bit careful. It seems a little bit too easy to get the buy right now. I would expect it to go a little bit lower, right, and then take off. But again, scenario one, we go higher here overnight. I'm not going to immediately sell it, though. I'm going to wait for the buyers to try lower high, volume analysis. That will tell me if those buyers have tried and failed, and we'll look for the sell back off these highs. If we go sideways here, we're going to measure out the range, buy lows, sell highs, buy lows, sell highs with the bearish bias. And of course, if we go lower, like I said, we've got to be aware we're going to see buyers enter this market, either at the 50.43, the $50 a barrel. I'm looking for the buyers to try and fail until we get to a bearish trend. Until we get bearish again, we have to keep looking for the buyers to try at support levels and fail. What we might get tomorrow is we may get a complete reversal now of that trend, and then we can go selling retracements all we want. So if you want to be a bear in a bullish market, wait for the buyers to fail. If you want to be a bull in a bearish market, wait for the sellers to fail, right? Say that 10 times fast. This is a really difficult spot here right now to be predicting tomorrow on crude because we got buyers coming in at the lows, we got measured move support, but at the same time, you can see we don't get the volume confirming at the low. Volume does not confirm the move lower. That's why I said volume is a pretty big deal tonight on this chart. When you measure the lower lows, you see we are completely flat. So we've got a ton of conflicting signals right now. The volume won't confirm us going lower. We know there's going to be some bargain hunters and some buyers at these lows. So again, my gut tells me we're going to go higher by default just because of where we are. So if you're looking for the sell, wait for those buyers to fail. If we collapse and go lower, just be aware you're going to get buyers at that 50. So wait for them to fail to get short. And again, don't forget, we're going to do this tomorrow morning in real time in our live trade room. So don't you feel like you get to do this all on your own. Now, here's another really good chart, right? Last chart here for the week, crude oil price action. Now, again, what's the point? Why do we do different charts? Well, remember, this chart shows ranges, right? It shows great patterns. It shows me exactly where the swings are. It helps me find wave patterns. It helps me find all kinds of different patterns. But with the convenience of a range-based chart type like the JJ bars, we lose a lot of information, right? It's a give and a take. On the tick chart, we get a lot more information, and we can read between the lines. We can read the candlesticks. Okay, you can't do that on the other chart. That's why I use 2 different time frames for our newsletter. So our price action chart is bearish. We can easily see that. Definitely a lot closer zoomed in chart on this one. But here's another clue. Look at this. Now on the last chart we saw, we were at major support. On the last chart that we saw, we had volume analysis that was telling us we'd probably go a little bit higher here. Now we have an undershoot on this chart. Here we go. If we were really that bearish, why did we stop there? Why didn't we go all the way down to the low of that channel and then start going higher, right? Maybe it's channel low. Maybe it has to do with the fact that it's sunny out here. Who knows, right? There's no way of telling exactly why. All we know is the proof is in the price action. So we know the undershoot is there, which means, again, we're likely to get a bigger correction. Dare I say 51.50? Dare I say 51.90? I would expect, like I said, based on the last chart, now confirmed on this chart, I would expect price to make a bigger correction before we get our next move lower. So what we'll do is we'll wait for price to go up, look for those buyers to buy in a pullback. When they fail, see ya, sucker, and we'll take this thing right back down. Targets are listed below you, and of course you'll have that trend line there. That'll be a target as well. Okay, so we are bearish, but we have an undershoot of the channel lows, which means we must stay patient to sell after a larger correction back up near the highs. Look to sell resistance levels overhead and use those support levels, and you know what I'm going to finish with. Don't forget that $50 a barrel for our target tomorrow. Guys and gals, that's my opinion for tonight. What's your opinion for tomorrow? I'd love to hear it. Post a comment below the video. Send me an email at jj@schooloftrade.com. And remember, you can always go out to our blog right now. Register for our free pass. Grab your charts for tomorrow. Register for the nightly newsletter. And don't forget to share this information with a friend. If you happen to have some discretionary time here this evening, wander on over here to SchoolOfTrade.com. Don't forget, we have the best free trial in the business. You're going to learn more on my free trial in 1 week than you've learned anywhere else on the internet. I can pretty much guarantee that. I'll put my money where my mouth is. I'll give you a great free trial, and you'll see just how detailed our course materials are and how well this stuff works. We got 3 levels of membership: beginner, intermediate, and advanced, and we always have someone standing by here to help you guys out 24/7, 365. Guys and gals, be safe tomorrow. Make sure you wear your seatbelt, your helmet, your mouth guard for non-farm payroll Friday. And I'll tell you right now, I won't think anything less of you if you trade very cautiously, half size, very conservative. Remember, the best day to trade non-farm payroll Friday is the Monday afterwards. That's the next time I'm going to see you on Monday evening. Also, don't forget, thank the heavens, right? We got daylight savings time starting up this weekend. Daylight savings time in the U.S., Sunday, March 8th. Don't forget to spring those clocks forward. No more going home in the dark from the office at night. And we finally get the sunshine a little bit more. Boy, one of my favorite days of the year, right? My other favorite day is the old winter solstice, right? The winter equinox, when all the days start getting longer. Yeah, as if you couldn't tell, I'm a glasses half full type of guy, right? I'm sure most of you are saying, but Joe, winter equinox, that's the shortest day of the year. Oh, no. Winter equinox is the day where we start getting longer, right? Glasses always half full. Absolutely. It's all about perspective, isn't it? Guys and gals, what a great week we've had. What a great first week week of March we've had. I hope you guys had a great time with me this week as well. Thank you so much for your feedback. Thank you for liking the video on YouTube. Thank you for referring friends to our free trial. And guys, don't forget, be careful tomorrow. Come out and see me in the trade room if you want some help in real time. Be well. Be careful tomorrow and be nice to each other, all right? Have a great weekend. Next time I see you, we'll be in daylight savings time next Monday evening, all right, for our next newsletter. Guys and gals, my name is Joseph. You guys have a great weekend. Adios, amigos. Bye-bye for now.